Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Welcome to Cut to the Chase. Today is Wednesday, the 12th of February. I'm Daniel Lam, your host for the podcast. Gold. Yes, we've been talking about gold quite often lately. That's been grabbing headlines yet again because it continues a pattern of parabolic rise and making historical highs. Now, gold is having one of the strongest starts of the year in 3 decades, firmly in the top quartile, only behind years of global growth, where it was under pressure at the turn of the calendar in 2008, 2012, and 2015. Now, we've been talking about the long-term diversification demand from central banks as a key underlying factor. Now, of course, the fundamentals was also supportive, with the decline in real yields lending tailwind to gold since January this year. Still, though, the actual move in gold over the past week has overshot what would have been historically the expected based on the inverse relationship with the US real yields. So who has been buying gold? One of the key contributors was the CTAs, because trend-following systematics were forced buyers as prices go above levels such as 2867 and then 2888, eventually stopping right around the next buy trigger level at 2909 to 2910. The other key buyer is the US-based discretionary institutional investor. Unlike November and December, when US growth optimism and rising yields had domestic investors trimming purchases of gold, the latest move has seen a positive shift in appetite during the US hours. But now the catch is that positioning is becoming quite crowded. The nominal net long exposure in gold futures, as well as the net number of discretionary traders holding long gold positions, is very close to historical highs. Now, technically, as I alluded to, gold is displaying a parabolic rising pattern. So therefore, it is likely that we're in the middle of this climatic rise in gold. In order to sustain this rise, we would need to see fear on US slowdown or a rise in the recession probability. That is all from me for today. As always, if you enjoy this podcast, please don't forget to rate and like it. Thanks for listening, and we wish you a happy day ahead.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details, visit Market Views on the Go on our website or click the link in the description.